Thanks for joining us for watching your ag commodity trade with a little extra expert help along the way. We have Jim McCormick standing by. He's from Allendale Incorporated in McHenry, Illinois. And Jim, I want to take a look here at what's going on here in this grain market today so far. We had the corn market fairly flat overnight in the Globex trade, but it opened firmer this morning. And we did have some overnight export sales announced, over 100,000 tons of corn to unknown destinations. So let's see where the corn is now here, Jim. And I want to get your thoughts on what the trade is doing right now on the March corn. And I'll start with March because December's in delivery now. March up 2 1/4 at 358 right now, within a penny of its high of the day. July up 2 at 373 1/2. So let's talk about this corn market here for a little bit. Do you think it has room to run to the upside, or do you think this is just in a choppy sideways pattern yet?
Actually, I think we've got a little bit of room to run to the upside. Like you said, we saw a little bit of excitement coming in. There's a seasonal play. You buy corn roughly today, and get out of it in about the middle of the month. Has worked 13 out of 15 years, so I think there's a little seasonal play going in. The other thing, Marlon, is the funds. They are huge, carrying a huge short position. The estimate is around 210,000 contracts, and I think some of them are just going to take some of that money and go Christmas shopping. They've got a lot of profits to book, and I think we're seeing a little bit of that. Chart-wise, if we close above last week's highs on this March corn, 58, you'll have had a key reversal week. That meant you took out last week's lows and closed above last week's highs, and I think that'll just institute that technical buying, short covering, and hopefully give us another 10 or 15 cent move higher.
Now, I was talking with Rich Nelson earlier, also from Allendale, Steve Georgie earlier, and he was saying that December 1st was the low last year at this time, and the market rebounded off of that. What do you think the odds are we can do that 2 years in a row?
You know, I'm hoping we can. Very seldom do you follow each year exactly, but as they say, history does kind of rhyme. Our carryout right now is projected at $2,487,000,000. A year ago in November, they were projecting to carry out at $2,403,000,000. So, in the big picture, the carryouts are about the same. We managed a nice little short covering rally into the end of the year last year. And like I said, with the funds carrying this heavy short position, they just got to decide, hey, I want to take the money. I'm going to get taxed on it. I'm going to book the profits, and that could be our, the momentum. Give us the momentum to carry the market higher.
Let's check out the soybean trade right now here, Jim, and go to the board in Chicago. On the soybean futures, let's go to January first of all here at the top of the board. And right now we have January 9 1/4 higher at 9.95. Just one tick off our high of the day. That's almost a full dime off of our earlier low this morning, Jim. We have July 8 1/2 higher at 10.25 3/4. Are you surprised to see that kind of strength after it sold off yesterday?
Well, not really in a way, because there's two things that happened. Technically, we sold off, but we held the 50-day moving average, so technically the bulls came in there and defended their position. The funds are long about 20,000 beans. But more importantly, it's the weather. We are really focusing on South America's weather as they move into that critical time period. And this morning, Argentina is trending a little bit warmer and drier, as well as southern Brazil. And, going into the weekend, we're putting a little bit of weather premium right back into the market. Yesterday, they weren't quite as warm and dry. So, took some of the weather premium out, putting it back in today.
Speaking of weather premium, are they building any into the hard red winter wheat futures with the drought monitor showing increasing drought in the southern plains?
Yeah, I think they are putting a little bit of weather premium in with that. Like I said, they're turning a little bit dry. Now, we go into dormancy, so it's not quite as critical as it will be if we get some moisture in the spring. But yeah, you're looking at the drought monitor. But the other thing we're looking at is what's going on in Australia today. They've had a short crop due to dryness issues this summer, but now they're getting ready to harvest it. They've got this huge storm going to come in there and clobber that country over the weekend, and there's worried about quality and getting the harvest done. So you've got two little weather plays going on the wheat market today.
All right, let's look at the futures then on the wheat, and we were just showing the Kansas City market here. We'll kind of run through these for everybody. Chicago wheat has March just one tick higher now at 433 1/4. On the Kansas City market, we have the March contract 2 higher at 433 1/2. By the way, new crop July is 2 1/4 higher. Minneapolis wheat, we have the March contract up 4 1/2 at 626 1/4. Cotton market right now, we have the March up 54 points at 73.35 cents per pound, so it has rebounded sharply off of its earlier low and turned around and gone to the plus side yet again. All right, that's a look at our crop markets. We'll come back and talk more with Jim McCormick about our livestock trade right after this. A lot of talk early today about the movement in the Dow Jones Industrial Average. And of course, it's been a big center of attention here all week long. Right now on the Dow in New York, a closer look shows that it is almost back to unchanged once again. We saw some selling hit the market after the open this morning. If you recall, it was down maybe 40 some points and then 30 points and then it kept gaining. Now we're only 2 points lower at 24,270. So keep an eye on that one. It won't take much, just a little nudge, and it'll be on the plus side. Oh, and there it is right there, up 2 points now at 24,274. So those of you viewing at home got to see it reverse itself live here on TV. Now we're already up 5 points, and there it goes. So Jim McCormick is joining us here right now. He's with Allendale Incorporated. This is quite a spectator sport this week, watching this Dow Jones Industrial Average, isn't it, Jim?
Amazing run. I mean, a lot of people thought, wow, this tax reform was been priced in the market. As it turns out, it hasn't. I mean, as the market's gotten more and more excited that they're going to get this deal done, it looks like, that's where the acceleration came in. As you mentioned, we sold off a little bit last night. There was a little bit of a hiccup about some of the trigger points getting done. So the market got a little bit spooked early, overnight when the market broke on maybe the deal wouldn't get done. Coming in today, I was here on the radar. They said they've got the votes to push this through the finish line, at least to get the Senate vote through, and that's what's pushing the market higher, brought it back to at least unchanged on the day.
Dollar value, we can check that too on the dollar index right now and look at the nearby futures here. So we have December now trading 190 points higher at 93.190. So today we have the Dow starting to firm up and the dollar higher at the same time. Now it's up 200 points on the crude oil futures too. We had a big run in the futures in January, up $1.26 a barrel now at 58.66 on the West Texas crude. That means heating oil is higher today. And on the heating oil futures in New York on the NYMEX, that's how they trade your diesel fuel, we have January almost 5 cents higher. It's 4.9 cents higher at 194.6 per gallon. Big move there as well. Into the livestock trade we go here, Jim, and looking at the live cattle trade, everything was lower here yesterday, and right now we're down $1.32 on the nearby December at 118.58. February down 166 at 123.32. So triple-digit losses across the board here today now. And feeder cattle trade, we currently have the January down $1.58 at 152.60. March down 168 now at 150.60. It's within 40 cents of its low of the day, well off its earlier high by about $1.50. On the lean hog trade so far this morning, we have the December firming up by $1.14, and now February up 74 cents. It's back up above $70 at 70.52. So the hogs going one way, we have the cattle market going the other way. Jim, your thoughts on what to expect to wrap up the week in livestock here?
Right now, I think we got to keep an eye on this cattle is yesterday's lows. We closed below yesterday's lows. I think that's going to increase more technical selling. Just opposite of the grains where the funds are short corn, they're actually long cattle. I think a close below yesterday's lows will trigger some more technical selling and liquidation by the funds. On the hog market, I think we're bouncing. Plain as before I came on, it is going to get bitter cold across the Midwest, and producers tend not to like to move hogs when it's this cold. So I think they're putting a little bit of weather premium back into the hog market right now due to the cold weather coming next week.
If that's the case, if it does get cold over that much of the plains, that would reduce the rate of gain on cattle, though, too, right?
That should help the cattle in the long run. It should slow it up as they feed a little bit. They use more energy to stay warm as opposed to adding to the pounds. So that will hopefully be friendly in the long run because we do have a big supply of cattle coming at us. So it's going to be a battle between supply and cold weather and demand. So that will definitely help in the long run if they don't put on the pounds.
Interesting stuff. Thank you, Jim. Jim McCormick of Allendale in McHenry, Illinois. So there's the latest.
I like how he said a battle between cold weather, supply, and demand, including the weather in there as well.
That also means they need more corn for the cattle.
Absolutely. All right.
More calories.
That's right. That helps you stay warm, actually, in the cold.
Right.
Okay, thank you so much. Markets editor Marlon Bowling.